What's new with you anyway, mate?
What's new, pussycat? Woo, woo, woo. Absolutely nothing is new with me.
Excellent. Right, Callum, why are we humans so bad at predicting the future or even remotely probable outcomes in the investment markets?
Well, that's an interesting question. I would say, generally speaking, that we tend to look at things linearly. So we kind of assume that tomorrow will look a lot like yesterday, and in the short term, that's always the case. But if you go back throughout history, nobody, if you grab someone from 1900, they'd be absolutely dumbfounded about all the things that we're surrounded by. Like it's just incredible the amount of
Mm.
invention and change that is always happening. So it's just very difficult. And I can speak from experience. I mean, the market is always doing usually what nobody expects, and things come out of left field. It's a very difficult thing to do, and our brains just aren't built to think in that way.
You kind of learnt about the investment markets. Not many people know this, by the way, but you learnt through you came up through the ranks, as it will, by looking at the markets through cycles, right?
Yes.
And I know in one of our earlier newsletters, you worked on first with Phil Anderson and then later with Catherine Cashmore, but you kind of viewed the markets through your knowledge built up via something the land price cycle.
Yep.
Now, does that not help you? Does that not help you do that very thing? Have more confidence in predictions, or is it even that when you kind of know the big, or you have a confident feeling about the bigger picture coming, what's coming? It's still hard to actually do it when you get there.
No, I mean the land cycle is very very good. I mean that basically teaches you the basic structure of the financial system. So absolutely. So last year, as you know, when I was putting out material to say this was actually a big buying opportunity because things had gone down, part of my confidence came from that cycle.
Yeah.
That said, that's like a big picture
Yeah.
view, and if we're talking about individual stocks or technology trends, there's only so far that can take you.
Hmm.
So while you can go, right, well, everything looks pretty fine today, and there's no reason to think the markets will collapse on me because of where that cycle is, it doesn't necessarily tell you what to buy on a Tuesday. I mean, um, you have to be wary too. And this is a little bit what I allude to in the article of just going, oh, okay, well, the cycle's here. So that means this thing, for example, like Melbourne property, for example, is going to
Yeah.
go up. Well, the
Yeah.
reality is, even if the general trend of real estate is up, that the Melbourne property cycle is a dud right now because of the things that impact on Melbourne. So you have to be, and this is basically the point of what I was talking about with the Trump trade. It's like, okay, well, yes, Trump's got in. It doesn't. You can't just reduce things down to one factor. It's just not that simple.
Hmm. Yeah, but I guess it gets so. Did that experience of cycles though? Did that? Not that I'm going to make today's questions about that. I'm just wondering. Was that what gave you like the bigger picture thing about 18 months ago to say this is going to be a very exciting time for small caps, for example, uh, as a broad trend? Do you know what I mean? But then in today's article, you're talking about. I mean, I've been talking about the Trump new Trump administration from different angles this week. First with Ryan Dintz on Monday and what it means for the crypto market. You actually refer to the fact that he's pro crypto in your piece, and then obviously with Brian Chu yesterday about the gold sector, which has kind of taken a breather since Trump came in. Um, but I guess broadly speaking, your view has not changed, right? But this one thing that's happened, this big thing in the US, um, you're saying people are kind of losing their heads over this one thing that the markets are driven by different variables, not just one factor.
Absolutely. So to go back to your original thing, last year when I did the speech, I put down what I called the big map and said you got to
Yeah.
start with the big map. And the big part of the big map was that the land cycle, which you refer to, is not over yet, and that would support asset prices. And if we have a healthy property market, we're generally going to have less risk in the stock market as opposed to the reverse of that. So that was that part of it. And you're right, Trump coming in, obviously it shakes things up and he has a certain agenda which people are running with. But that said, as I'm alluding to, you can't just go, oh, well, I'm just going to buy Bitcoin, buy US stocks, and buy oil because, Trump seems to be in favor of these things. It's just not that simple. You have to check in with all the other things that impact on those particular asset classes and where they're at and what the market's pricing in and why that might change. And the example I give is nickel in the article, which, if you go back 3 years, every man and his dog was chasing battery metal stocks. It was lithium, copper, rare earths, nickel. I mean, we all know the graphite, these type of things. But, and I know this for a fact, when you go and follow those type of stocks, well, there is, and we just saw it with Paladin the other day, a lot more things than just the nickel price. You've got construction, labor availability, the deposit, all this type of thing. And then even more extraordinary, I remember at the time pointing it out to my friend Hedley Widdop, I said, well, at the moment, battery demand for nickel is 2%. The rest comes from the stainless steel market. You can't, everybody's just lost their head over nickel. And it's like, well, 98% of the demand comes from somewhere else. What happens if stainless steel goes into a collapse? Um, and that's sort of what we've seen. The nickel price has totally tanked. The whole EV thing has lost its momentum in the
Yep.
minds of people. And if you're in nickel stocks, well, you pretty much just lost everything. So all the point I'm making is that Trump is probably good for all those things that we've talked about in some way, but it's not just as simple as going, oh, well, it's the Trump trade. I'll just throw my money into it.
Yeah,
Um,
you kind of refer to the concept as the one variable illusion.
yes,
Um,
I've known, it comes from this book. I've just got it.
yeah,
It's just on the floor. Sorry. That's quite an interesting book, and he just talks about the way people think, and you see it all the time in the financial markets where people use shortcuts. It's like, okay, EVs are a thing now. Let's all go buy lithium or speculate. And for example, those lithium stocks, yes, what was a genuine trend and a beneficial environment, they went so far over the top that people who bought at the top were paying ludicrous prices. And if they've held on, they've been smashed 90%. So again, you can't just go, oh, EVs, great, let's buy lithium. It's just not that simple.
mm,
And so that was basically the point of this book. You have to factor in different variables to together a comprehensive case when it comes to this type of stuff.
yeah.
So in the article, I point out, part of the reason that US stocks are going up, it's not just because of Trump, it's that they're making a lot of money. Their profits are at all-time highs. And then, of course, the market can see interest rate cuts coming in and then the Trump taxes. And so there's more than one thing. But if some of those fall away, well, then Trump can't hold up the market himself.
Some people would seem to think he could.
Yeah.
Hey, but I was going to say, which market or variable do you think that people are dangerously overlooking right now? Is there any ones that you're getting wary of? Think of like nickel when it's getting overheated.
Not particularly I would say, as a general rule of thumb, interest rates are overemphasized. I mean, we
Yeah,
constantly hear about the RBA and where they're going and what they're going to do. Again, there's more to the economy than just interest rates, and sometimes they don't even. There are companies that it doesn't even have an influence on them. But is there anything particularly flashing a warning sign? No, not really. I mean, the volatility in the market's pretty low. There's always the argument about valuation, but that's just standard market stuff. So no, I would have to say there isn't one particular thing that's flashing red for me right now.
how do you suggest that? So, bearing in mind your critique of oversimplifying market analysis, and on the other flip side is that retail investors often struggle with information overload, right? You also mentioned that. How do you suggest that people balance the need for a comprehensive analysis, but with the practical constraints of their time and resources? Because the human brain does simplify stuff because it's the easiest thing to do, right? How do people combat that sort of innate handicap?
Well, that's where we come in. So,
Oh yeah, good
like
point.
Ryan with Bitcoin, for example. I mean, I haven't seen the interview that you did with him, but of course he'll go,
You
well,
haven't? Oh, Callum, I'm
I will,
absolutely
of course.
offended by that.
He will, of course, say, okay, this is the change that's happened. We know that Trump is, well, he says it's pro crypto, which is introduced this idea that the US will introduce a reserve for the Bitcoin. Now, how likely that is, I don't know. But also with Bitcoin, we know that liquidity impacts it, the interest rates impact it, the retail demand impact it, the fund managers, the ETFs, all this type of thing. So, and those are the type of things that Ryan talks about in his weekly email. So, it always just comes down to you have an idea, you see some sort of catalyst or market. You just have to spend some time with that market to work out what influences it and how big each factor is. That's all. Um, so all I'm saying, it's not that the Trump trade. Well, I was going to say the second part of the Trump trade is not only you cannot simplify it, but the other thing is that he's a politician. He tells people what they want to hear and this type of thing. So we don't even know if he's going to follow through on all this stuff. So the danger is if some of these assets run up on expectation that he'll do it and he doesn't deliver, obviously they're going to fall away if it doesn't come through. So
Mm.
you and as I allude to in the article, he's not exactly famous for his follow through or the accuracy of some of the things he says. So you just got to be a little bit careful with that type of thing.
I'm looking at your ASI. What so for people that don't know, ASI is Callum, your subscription newsletter that you do, small Australian small cap investigator. For those that don't know, it was the original newsletter that we launched back in 2007, I think, and it's had a few significant editors, and you're helming the thing. And I must say, the open portfolio is looking really healthy at the moment. Now,
Yes.
obviously, it goes with the proviso that small caps are inherently volatile. It just takes, like you said, with the nickel market, it takes a some kind of halt in the momentum, or people just get less excited about a certain sector, and momentum can shift the other way. But obviously, you're aware of that, and you're sort of navigating the portfolio through it. But you've got like 33%. 19%, 92%, 64%, 506%, 320. It's looking really strong. There's a few picks that are down from your buy recommendation. 9% down for if you want to be
Yep.
equal. 19% down, 17% down to 14. But that's four picks out of a sea of others that are flying. Um, so how do you manage that, right? Because I wouldn't mind just getting a bit of insight into how you're looking at the portfolio now, because obviously we contextually when there's a positive sentiment coming out of the US, it kind of flows on to everywhere else. Is there anything that you're looking at doing to mitigate any turn in momentum, or are you pretty happy with where things are right now?
Well, it's an interesting one. I mean, in some ways, I inherited a poison chalice because I took over in 2022, right, which is just when
Yeah.
the small cap sector collapsed, or as it was about to collapse anyway. So, for the first year and a bit, it really was navigating a very difficult market. So, I managed to avoid a lot of the carnage, but overall, the market was against us in the sense that the tailwind was not behind us. But that's what made last year so compelling. And now I've been around a long time. So, when everything was on the floor,
Hmm.
all you had to really do was go, well, look, the market has already collapsed. So all you have to do is step in and buy some of the projects that look really juicy. And that's why that returns have been so good in the last 12 months. Now, we haven't got everything right, but we've had some belters there as well. But I always start with what's the downside on this type of thing. And so, again, last year, it was a really good look because the prices had collapsed. So you weren't taking a lot of risk relative to how it can normally be. Now the market is reflating,
Yeah.
and that's why we're at all time highs. But the small cap sector is still not roaring, and I came across some evidence actually that the volume in the small cap sector really has fallen away from where it was pre-COVID type of thing. So again, there's a lot of potential for it to come back. But that said, that kind of tailwind of the market recovering has kind of played out now. Now it really comes down like the what we alluded to before, where I need to lock on to companies that are actually doing something. You can't rely on a rising market, is what I'm saying. They
Yeah.
need to be doing something inherent in their business and their industry for the stocks to really start to keep pushing through, because
Hmm.
the overall market is not going to just reflate stocks. So that's why the gold sector, for example, is really interesting, because the gold price is genuinely high for them, and there's lots of money flowing through that particular industry. So as of right now, probably the most exciting industry in Australia is the gold industry.
And I guess one aspect where Trump sentiment or the Trump trade would benefit that is you mentioned his drill baby drill policy. If that comes through, that means costs of gold miners will be coming down too, right?
Well, that's a very interesting one because generally we take it as okay, he's pro fossil fuel, so that could be perceived to be good for the oil industry. But the reality is, I've got a pretty good insight into the oil industry because of a contact in the business there, is that there is just oil coming out from everywhere. It's coming from
Right.
South America, the Middle East, Nigeria, the US. Everyone is pumping like crazy. So there's a chance that the price will actually collapse. Trump may
Well,
go.
that's what I mean. That's
Maybe
good for gold miners, is it not?
Well, it is, but I mean, I'm saying that the perception is that oil might have a bit more of a life if Trump likes it, and the
Right.
ESG thing falls away. I'm saying the price could collapse because it's just too much of it, let alone what Trump
Yeah.
thinks. But no, you're right. The diesel is a big cost for miners, but again, that is a minor variable. Of course, the most important thing is what's the gold price doing, and how much gold do they have in the ground. It's not so much about the fuel costs.
All right, Callum, we'll leave it there today. Thanks for the insights there. And if you're watching, you enjoyed this conversation, go check out Callum's article, which on the article on which it is based on. And what's more to say? Are you going to end with a little ditty again?
Absolutely. What song do you want to hear?
I don't know. Maybe Burn, 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 Ring of Fire.
Okay, Johnny Cash. Burn, burn, burn. What's the other line? I can't remember.
The Ring of Fire. Thanks for tuning in to Fat Tail Daily. If you're ready to take a new approach to building wealth, avoiding the same old mainstream ideas and investigating new market trends, then make sure to hit the subscribe button and turn on post notifications so you don't miss a single video. And as a thank you, we've got a free report just for you. It is packed with actionable insights that show you how to capitalize on an alternative investment idea that you'll unlikely find anywhere else. You can download it right now by clicking on the link in the description below. So, if you're ready to discover strategies that the traditional market just doesn't offer, grab your free report. Until next time.